Good afternoon, everyone. Welcome to the Godrej Agrovet Q3 and 9M FY21 earnings conference call. From the company, we have Mr. Nadir Godrej, Chairman of the company, Mr. Balram S. Yadav, Managing Director, and Mr. S. Varadaraj, Chief Financial Officer. We would like to begin the call with brief opening remarks from the management, following which we will have the forum open for an interactive question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would now like to invite Mr. Nadir Godrej to make his initial remarks.
Good afternoon, everyone. I welcome you all to the Godrej Agrovet conference call. I hope you and your families are in good health and are staying safe.
Mr. Godrej, so sorry to interrupt, but if you can be a little closer to the device, please.
I'll start again. Can you hear me now?
Thank you, sir. We can hear you.
Good afternoon, everyone. I welcome you all to the Godrej Agrovet conference call. I hope you and your families are in good health and are staying safe. With a sharp decline in COVID-19 cases in India, the economy is recovering at a faster than expected pace. Economic indicators have been strong over the last 3 months, in which GDP growth rate is expected to be in positive territory from Q4 fiscal year 21 onwards. The agricultural sector has grown ahead of the economy in the first 9 months, and near-term prospects are also promising with higher kharif production, higher rabi sowing, and favorable commodity prices. Further, measures announced by the government in the recent budget are positive for the agricultural sector in the near to long term. Overall allocation for the sector under various schemes has increased by around 6% for the next year. The budget primarily focused on increasing farmers' income and their access to credit, which also augurs well for the companies in the agricultural sector. In addition, the increase in customs duty on shrimp feed and increase in customs duty plus taxes on crude palm oil will help in increasing domestic production and is beneficial for Indian companies. However, the rate of recovery remains slower in a few sectors. Demand from the HoReCa segment is still subdued and out-of-home consumption is much lower. But we believe that with the opening of the economy, demand should increase in the near term. Moving to the financial and operational performance, the key highlights and developments for the third quarter and the 9 months ended December 2020 are as follows. We had another quarter of good performance. Our consolidated profit before tax during Q3 fiscal year 21 increased to 87 crore, representing a growth of 28.4% year-on-year. This was despite a 14.3% decline in the consolidated total income. Similarly, for the first 9 months, our profit before tax increased by 39.8% to 367 crore, despite a 10.2% decline in consolidated total income. Please do note that the third quarter and 9 months of the current year, total income and profit before tax exclude non-recurring profit of 2.8 crore earned on sale of land. Also, for 9 months, total income excludes 9.6 crore and profit before tax excludes 4.8 crore of non-recurring income earned from the sale of a real estate project. Now I will discuss the key financial and business highlights for each of our segments. In animal feed, the segment results grew by 9.1% during the current quarter and by 11.2% in the first 9 months. However, lower demand for the end protein basket, that is milk, chicken and eggs, continue to impact volumes for cattle, broiler and layer feed. As a result, volumes declined by 16.5% each in Q3 fiscal year 21 and in the 9 months fiscal year 21, and sales were lower by 23% and 19% respectively. Though the pickup in feed volumes in Q3 has been lower than earlier expectations, in the coming months we expect a faster uptick in the demand from the HoReCa segment as restrictions on these sectors have started easing. In the vegetable oil segment, the current quarter was adversely impacted by a whitefly attack leading to lower fresh fruit bunch arrivals and lower oil content in the fruit. Therefore, segment revenue and segment results were lower by 16.6% and 30% respectively. For the 9 months fiscal year 21, while revenue grew by 5.2%, driven by an increase in crude palm oil prices, segment results declined by 7.8%. In the crop protection standalone business, increase in volumes led to revenue and segment result growth of 13.4% and 23.2% respectively during the quarter. Further, collections were 572 crore in the first 9 months compared to 454 crore in the same period in the previous year, which is an increase of 26%. However, due to supply chain disruptions and low application opportunities in the first half of the year, sales and profitability of the 9 months have been adversely impacted. Moving to the performance of our subsidiaries in Astec Life Sciences in the current quarter, total income and EBITDA declined due to deferment of a few orders and decline in the price of one of the key products. However, on a 9-month basis, total income grew at a healthy rate of 12% and EBITDA grew by 62%. This growth is driven by higher volumes and realizations of key products. Geographically, revenue growth in the 9-month period is driven by the domestic business. However, exports have also been higher than the previous year. In our poultry subsidiary, Godrej Agrovet Ltd, while sales were marginally lower this quarter than the previous year, profitability was strong as the company reported EBITDA of 10.6 crore compared to an EBITDA loss of 9.2 crore last year. For 9 months, the revenue grew by 15.5% and EBITDA was 41.1 crore compared to an EBITDA loss of 14.1 crore in the previous year. Both live dairy and young segments recorded strong growth in profits and benefited from low raw material prices. In our dairy subsidiary, Creamline Dairy Products Limited, sales were impacted by low out-of-home consumption and subdued demand from the HoReCa segment. However, the impact in the current quarter is lower than the impact seen in the previous 2 quarters. During the third quarter, revenues declined by 10.1% year-on-year, but low procurement prices and focus on fixed cost control resulted in sharp EBITDA growth. We also relaunched Godrej Ghee during the quarter. For the 9 months, while sales have declined by 17.3%, EBITDA is up by 16.9%. GAVL's joint venture in Bangladesh, API Godrej, recorded another quarter of strong performance with revenue growth of 25% and profit before tax growth of 50.3%. Performance was driven by strong volume growth across all feed categories, that is cattle, poultry, and aqua feed. That concludes our business and financial performance update for the quarter and the 9 months. With this, I close my opening remarks. We will be now happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prashant Biyani from Prabhudas Lilladher. Please go ahead.
Yeah, thanks for the opportunity. So the economy is in unlock mode and out-of-home consumption has also increased. But our decline in feed volumes is still to the level of in Q1 of around 16 to 17%, when the impact of lockdown was much more severe. So in current quarter as well, this 16% decline in feed volumes, what has led to this? If we can get some more clarity on that.
So even though economy has started improving, the contraction of the sector has not eased fully. According to us, chicken is still operating at about 75 to 80%. Chicken and egg, milk is operating at about 80 to 85%. In the first month of this quarter, current quarter, we had seen some improvements in almost all the animal protein sector, but for the bird flu which hit the egg and the chicken sector again. So my sense is this is the quarter when consumption will come down. This is the quarter when profitability and volumes of the animal feed businesses will improve. And you will see that consumption of milk has already started improving and shortages have been registered in several parts of the country, and ex-farm milk prices have also increased. So my sense is that April to June will be the quarter when we will come back to what we were in last January as far as animal protein industry is concerned.
Okay. And sir, on the palm oil side, how much was our volume for Q3, processing volume, plantation area and recovery rate?
Just one second. So I'll just add to what I said. I think for first 6-7 months of this calendar year, milk will be short. Milk prices at the farm level and with a time lag at retail level will go up. So my sense is that profitability will be impacted in the first 6-7 months of the first quarter, but it will start improving thereafter.
Okay.
In terms of the biofarm volume, we have around 1 lakh tons of FFB which we process, the fresh food bulk which we process. We sold around 19,000 tons in this particular quarter. Oil, fruit palm oil. Yeah.
And so how much is the plantation area in hectares?
Plantation area would be around 73,000 hectares overall.
Including the Telangana allotment that we got?
That will come in future. Yeah. This is the area which is already planted.
Right. And recovery rate would be how much?
The oil extraction rate would be close to 18.7%.
And so this OER was how much in Q2 and Q3 last year?
Q3 last year was around 19%. And
Q2?
Q2, I'll just let you know. 17.3 was Q2.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Nitin Sagder from Green Capital Single Family Office. Please go ahead.
Hi, good afternoon to the management. My question pertains to Godrej Tyson Foods. What have we seen in terms of last quarter's performance vis-a-vis this quarter's performance in terms of modern retail home trade and in terms of the movement of chicken and products on the shelf? And can we anticipate a better performance in Q4 considering we had a drawdown in Q4 of last year, Jan, Feb, March onwards on the modern retail home trade? If you could just talk about some points there. Thank you.
So as far as Q3 was concerned, we were very, very happy because whether it was Yummies, whether it was RGC or whether it was Live Bird, all of them were doing very well. Profitability-wise also and sales-wise because the markets were coming back to normal. Profitability also improved because of low raw material prices, so cost of production of chicken had gone down. We were expecting a very, very good quarter for all the chicken products. Unfortunately, because of bird flu, there has been a little bit of setback, particularly in the last 20 days of January, and now that some improvement has started. We still believe that post 15th of February, the chicken consumption and the prices will rise further and the prices will become remunerative. Raw material costs are still benign, so we expect that whatever we have lost in the first few weeks of this quarter will be made up in the last few weeks of this quarter. Having said that, I must tell you that these kind of disruptions, whether it is bird flu or whether it is any other kind of reason like last year, which was corona, chicken prices go down and they come back with a vengeance. So our sense is that we are likely to have very good March and the first quarter next year because chicken production again has taken a turn downward. So we believe that in a few weeks the shortages will hit. Yummies is doing well. It is not that it is growing at 40-50% what we did in the first half of the year, but we are maintaining a steady pace of 15 to 17% growth Q on Q in the yummy segment.
Relates to, is there any innovation planned in terms of expanding the chain line? While I understand India to be a predominantly vegetarian or a chicken poultry country, but there are certain trends to indicate plant-based meat products or even certain meat products where the consumption is increasing in India. So is there any line to say that Godrej Tyson might look at certain more meat rather than chicken in the coming year? And if you could just talk about that a little bit.
So Tyson has progressed well in US on this alternate meat. And we are watching, we have the know-how through Tyson. As and when we believe that market is ready in India and we keep on doing consumer surveys for that, it will not take us a long time because of our partnership with Tyson to launch products like these.
Okay, great. Thank you. That really helps, and all the best for the coming year. Thank you.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, first question on the palm oil side. Now, if I look at the 9-month performance here, while the recovery rates you mentioned, especially for this quarter, is largely flattish what it was last quarter. But on the margin side, the performance has not been as great. So if you could, put some light over this year performance and how should we, look at this business going ahead?
So let me tell you that first time in the history of palm oil in this country, we had this whitefly attack on the plantation, and not just us, but all the other companies also have suffered, because this is a problem which will affect the community rather than a few gardens. Unfortunately, when this was noticed, it was also at the starting point of Corona lockdown, and the sad part is that in spite of the fact that we knew what the treatments were, it couldn't be controlled because of the lockdown in the first few weeks, and that is why the FFB production for all the players have suffered. And that is primarily the reason why this business has contraction of margins. So not only we had less fruits, initially we even had less oil, because this whitefly is a very devastating insect for all crops. Now what has happened is in last 3-4 months, rampant spraying has been done by all players supported by the government. Several other kind of biological treatments have also been embarked upon, and with a very, very good success, because we are seeing that as compared to last year, the infestation is at very low level. We will still keep our fingers crossed, because this is a fight which any individual company or farmer cannot fight. It has to be fought by all the companies, and all the gardens have to be sprayed regularly to keep this insect away. That is primarily the reason why the OER suffered initially and fresh fruit bunch arrival suffered in this business. If you see, this would have been one of the greatest years for the business because of such high oil prices. But unfortunately, because of this black swan event, both in terms of Corona and in terms of whitefly attack, we could just barely come to the level of last year actually.
Sure, sir. So, sir, so this year is largely done. So, but let's say FY22 onwards, and where I'm coming from is, our earlier commentary wherein we had, highlighted the mechanization as well as the newer machinery, which would have helped the company in terms of getting a higher yield as well as sort of, margin accretive investment there. So, should those benefits start accruing FY22 onwards, or, how should one look at it?
Well, I'm saying that one good thing about plantation is that every year is a new year for plantation. In case there is no insect infestation, we are very sure that OER as well as fruit arrival will improve. And almost 3,000-4,000 hectares in Andhra Pradesh will also come into production, and that will also add to our volumes. So we are expecting a good year in all three areas: more oil, more fruits, and better prices.
Okay, fair enough. Sir, secondly on the animal feed side, now we have seen pretty impressive performance there on the margins front, although realizations have been probably, declining over the last year or even a flattish sort of a structure, on a Q-on-Q basis. So two parts there. One is how is the volume breakup between the respective sub-segments here, broiler, cattle, layer, etc. And, what are your thoughts on the margin sustainability? I remember you had earlier also mentioned that we'll maintain or improve these margins. But what should be the steady state outlook here?
So before that, I'll just make one comment on palm oil, and then my colleague will give you the numbers. So I think you must understand one thing is that this oil prices is a pulses moment for us in India. The way it happened in pulses a few years ago and pulse production went up, I think that is likely to happen in oilseed production also. And I must tell you the proactive step of the government in terms of reducing the duty from 32.5% to 15%, 27.5% to 15% and putting 17.5% agriculture step. What they are also indicating that should the oil prices fall globally, they will still have room to increase duty to keep the local oil prices at very remunerative levels for the farmers. So this is the point I wanted to make. Yeah, you can tell about...
Sure.
In terms of our volumes, we have around 125,000 tons of cattle feed, and poultry feed is around 120 tons again, 120,000 tons, and aqua feed is around 23,000 tons, and fresh is other feed. Yeah.
Okay, and lastly, your comment on the margins front, because, while the realizations have been okay, but margins have improved significantly. So your thoughts there.
We expect the raw material prices to remain benign, except for soybean, which has definitely gone up. I am very sure that the kind of coverages we have, because last year also we could have really done well, but for COVID, because we ended up with very good coverage and suddenly raw material prices fell. So we had to carry this high cost raw material through the P&L. Now this year, if you ask me, in case there is no untoward incident, we are very well covered, and we believe that we will be able to maintain these margins, and you will see this good news from the current quarter onwards.
Okay, great, sir. Thank you and all the best.
Thank you. The next question is from the line of Aniruddha Joshi from ICICI. Please go ahead.
Yeah, hello sir. Thanks for the opportunity. So two questions. One, in case of dairy, the profitability of the sector is almost at the peak level now, considering the way the global S&P prices are inching upwards, and the way the milk prices are also starting inching upwards. Basically, the profitability sector might come under pressure in it.
Mr. Joshi, may we request you to keep a distance between your mouthpiece and...
Yeah, is it okay now?
Yeah, now it's fine, sir.
Okay, so the question is, dairy sector profitability is at peak. So now probably profitability might come down. So how do we see the profitability of Creamline working? And secondly, you have also got now brand name change from Jersey to Godrej Jersey. So almost 3 to 4 months have been over. Obviously, it's not a long period, but any early indications that is there more acceptance for the milk, considering now there is Godrej, which is an extremely trustworthy name attached to the brand, and have you seen any traction for the premium products, etc.? So that is question number one. And question number two is that the issues like bird flu kind of represent a good opportunity for an organized and strong player like Godrej Agrovet to gain market share on a sustainable basis. So what are the strategies that the company is working on to gain market share? Yeah, thanks.
So, Creamline Dairy, I'll refresh what I have been telling you for some time is that in year FY19 and FY20, we have commissioned several new production facilities, like a Visakhapatnam plant and a value-added plant near Hyderabad. And these investments have been substantial considering the size of the business. And they were supposed to start playing out from Q4 and Q1 of this year and Q4 of last year, but unfortunately it took a setback. However, having said that, I must tell you that there is steady improvement in our EBITDA margins. If you see Qtr3 FY20, our EBITDA margin was about 2.5%. It has jumped to 5.4%. And we strongly feel that our focus on value-added products will continue to keep on improving this EBITDA margin. The second thing I wanted to say was that ever since this brand thing has been done, month on month there is a steady increase in all our products, including liquid milk, curd, etc. But for the institutional segment, which is very subdued still. So the overall numbers are improving in retail, but institutional segment is still not showing that kind of traction. Having said that, I must say that we are very, very encouraged by the digital marketing initiative taken in both our businesses, because that was the only possibility and an efficient vehicle to reach as many consumers as possible, both in yummies and value-added products. Unfortunately, several studies which are done for market share have not been done by market share calculating companies. So we strongly believe in yummies in Godrej Tyson, as well as our value-added products, particularly flavored milk, etc. In modern retail, we will see increased market share in the current quarter. Now, high prices are a regular phenomena once in 2-3 years in dairy business, and I think that will put a lot of pressure on our profitability in the first 6 months. But we must also remember that this is a business where once the prices go up, they don't come down. So come flush by August, September, we believe that the prices ex-farm will go down, and that will definitely improve our margins considerably. So we might have a tough first 2 quarters, but we will have a very, very good last 2 quarters, I'm very sure.
Also, hopefully, next financial year, with the economy opening, the HoReCa segment sort of opening up, our business also, especially the institutional part of the business, should start looking up. Because in the current year, this particular business has got severely impacted because of the HoReCa segment. And so in our case, the exposure to the HoReCa segment was more, and that's why we got impacted more.
Okay, sir. What is the total contribution of HoReCa plus institutional to the overall creamline sales?
In liquid milk, curd, etc., it used to be close to 30%.
Okay. Okay, sir. And the last question on the strategies to gain market share in poultry and poultry feed business, given people get worried about the unorganized products, but they're still okay to eat organized products like Godrej Tyson or yummies, etc. So how do you see that market share gain moment happening for Godrej?
In both the geographies we operate, our retail sales has been less affected than the commodity sales as far as chicken is concerned. And we are getting a lot of institutional orders also, because a lot of these institutions which earlier would not buy from us our inquiries are coming. So my sense is that once this bird flu blows over, say by March, April, our processing plants in both in Bangalore and Taloja and near Maharashtra are likely to operate at about 70 to 75%. And I need to tell you that first Jan to March last year, these plants it used to operate at a capacity of about 60-65%. So we are seeing very good traction for processed chicken. Yummies, is up by almost 30-35% over last year, and that trend is likely to continue.
Okay, sir. Last question from my side. In case of shrimps, we are still seeing that the entire industry is still not doing the way it used to. So how do you see the shrimp feed part of animal feed business doing? And what is the, let's say 1 year kind of an outlook on that business? Now almost 6 to 7% of USA population is down with COVID. So the major customer for shrimp itself is having multiple problems. So how should we read about shrimp feed business?
So I am very optimistic about the shrimp and shrimp feed business because of three reasons. First reason is that out of a market of about 1.2 million tons of shrimp feed, 12-13% of share had gone to these imported feeds just because of price differential and because of low raw material price outside. A lot of Chinese and Vietnamese feed companies were selling feed in India. Because of duty increase from 5 to 15%, that price advantage they had will be gone, and that benefit will come to local companies. So, and not only that price benefit will come to local companies, because we will have both advantages. Advantage to get market share and advantage to improve margins, because they have to increase their prices by 10% now. So that is point number one. Point number two is that the news which is coming up of the placement for the coming year, everybody is very optimistic, because you must also understand that placement of March, April will only come into market by July, August. And we expect that most of the developed world where our shrimp go will be vaccinated by that time. So we expect a very good year for shrimp.
Okay, sure, sir. Many thanks.
Thank you. The next question is from the line of Dipesh from Equirus. Please go ahead.
Yeah, hi, sir. Thank you for taking my questions. So in the animal feed segment, you gave the absolute numbers. Can you please give the volume growth number for your individual segments, that is cattle, broilers, and the aqua, please?
First 9 months or fourth month?
This quarter, please.
Okay.
Yeah. So we have vis-a-vis same quarter last year, we have degrown in volume in all the segments except for aqua. Yeah. And I think so around 12% degrowth is there in cattle feed, around 20% degrowth in broiler feed, and around 28%. So poultry is around 24% or so.
Okay. And the growth in aqua, sir?
So that's a small growth we are having. In case of shrimp feed, we are having a growth of around 4%.
Understood. Thanks. Secondly, sir, given the sharp drop in the broiler prices, just wanted your thoughts on how are the bird placements happening in January, February, and what kind of volume and pricing impact you see on your broiler and layer feed segment in this quarter?
So, definitely there is some drop in placements of broiler, but not that significant actually. So, we believe that our broiler feed volumes definitely will not be impacted. As far as layer is concerned, the placement of layer bird cannot be impacted because of few weeks of bird flu, because the life cycle of this bird is almost a year. And you must have seen the egg prices have still held on, and they have not dropped to the extent the way broiler prices have dropped, because there is still a little bit of shortage of eggs because of lower placement during COVID, and this shortage of eggs is going to continue for next 6-7 months. So we believe that our broiler feed volumes are not likely to be impacted too much this quarter, but layer feed volumes will start picking up as the layer placement starts from March, April onwards.
Understood. So, in your palm oil segment, just wanting to understand, given the high CPO prices and the stable OER ratio that you just talked about, why did the EBIT margins reduce YOY? Is there any change in the pricing formula, or the depreciation number has increased?
So, in case of oil palm business, though the selling prices increased, we had seen a small drop in the oil extraction ratio vis-a-vis last year. And that, as I mentioned earlier, has happened primarily because of the whitefly attack which was there. So, that is the reason why our oil extraction ratio in the current year is lower than that of last year.
So there is no update on the pricing formula that Telangana government was going to do?
So Telangana government, both the governments have released pricing formula, and it is slightly higher than expectation, definitely. So, but I don't see a material impact, because anyway, we have already been providing at about 18.2 or 18.3%, so there is only marginal increase in the formula.
Okay. Lastly, sir, what is...
Also tell you one thing is that
yeah.
Out of something like 35,000, 36,000 hectares in combined Andhra Pradesh. Only about 1,500 to 2,000 is in Telangana.
Okay, understood. Lastly, sir, what is the outlook on the CPO prices given that they are still at very high levels?
I think I told you that CPO prices will continue to be high level for some more time. We expect that from Q2 of the next year, that is from July onwards, they will start softening, and that is what the expectation of the central government is, and that is why they have created a space for increasing duty by reducing the custom duty and putting that agriculture set. So my sense is that government is very, very focused on improving the oilseed production in the country, and even though the prices fall, I have reasons to believe that government will provide protection because of duty increases.
So if I can ask one more question, please.
But I just wanted to add one more line. Sure. That all food products I have seen, whether it is chicken, egg or milk, at certain prices the demand starts tripping, and CPO prices are extremely high as far as that is concerned, and at this level the demand also starts tripping. So we are not very happy at a price of 95,000 to 100,000 rupees per ton of CPO, because at that point the demand starts suffering.
Understood. So can you give the SFB process number for last year? You gave this year, it was this quarter it was 1 lakh tons. What was it in the third quarter last year, please?
That would be around 1,31,000 tons.
Okay. Thank you, sir. All the best.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Sumant Kumar from Motilal Oswal Financial Services. Please go ahead.
Yeah, hi, sir. So, with the rising raw material prices of soybean and others, can we expect price increase in animal feed segment?
Already happening.
Okay. So how is the price increase in the current quarter and current month?
I would say December to January, the poultry feed prices have increased by about 3%.
Okay. So in line with the price increase of soybean?
Yes.
So whatever the contribution it is?
Yeah. All full pass-through was there.
Okay. And talking about overall, you have talked about the bird flu and its impact. So, in this coming quarter, we have seen an impact on the volume. What kind of volume impact is expected in the coming couple of quarters?
So, as I told you that whenever we have a problem like this, it is always followed by very high prices, so profitability goes up. And definitely with each of these disruptions, the processed chicken market improves. So we believe that our market share in the processed chicken in yummies will improve as the bird flu scare goes away, and profitability will also increase because commodity prices, that is chicken particularly at the live bird level, will go up. It has already started going up. If you ask me, about 25th or 26th of January, the prices in South India were at about 45 rupees a kg. Today they are at 68, 70 rupees a kg. And most probably in a week's time they will cross 80, 85 rupees a kg.
So that overall in Tyson Food we will see a significant improvement, but animal feed segment will have an impact into the coming quarter, this quarter.
Animal feed, as I told you, that layer does not go up and go down significantly. I think layer has suffered a lot during COVID when the placements were not there, and India for last several months have had tightness on egg production, and that is why egg prices, egg farm have been at all-time high. The only thing is that since the broiler cycle is a short cycle, it is a 5-week cycle, there we see more fluctuations in terms of placement and in terms of feed consumption.
Can you talk more about the product launches in crop protection in the coming year and coming quarter?
You have it.
So in terms of product launches, we have around 6 products which we propose to, which are in pipeline. of which 4 are herbicide, 1 is a fungicide, and 1 is a biofertilizer. Yeah. Apart from this, we have around 5 products which will be in license to us and which we propose to launch. Yeah.
Out of 6, 5 is in licensing.
No. There are 2 different parts.
This is at different times. Everything is not in the...
No. This is all pipeline. This is a total pipeline which I am talking about. There are 6 products which are in pipeline, which is our own product, which we are developing, and 5 products which are to be in-licensed to us. So in all total 11 products. These are not all launches in the next year. This will be launched over the next 2 to 3 years. Yeah.
Okay, 2 to 3 years. Okay. And talking about overall, in budget, the government has announced effectively 5% increase in the crude palm oil import duty, right?
Yeah.
Yeah. So and with the increase in prices globally, and this duty increase of 5%, and in the coming season, assuming better fruits, FBB arrivals, and OER, can we expect 22 is going to be a bumper year for the palm oil?
I think in our sector, predictions are not easy to make. Who had predicted that things will happen the way they happened last year? But definitely, the prices will be good, the OER will be good, and the arrival of fruits will be good. That I can tell you.
Because this year, as we talked about, this white fly impact has been quite severe. So hopefully next year we wouldn't see that impact. So definitely things should look much better.
Thank you so much.
Thank you.
I need to tell you one thing. The problem was not white fly last year that much. The problem was our inability to control it because of lockdown, etc. And by the time we could do that and the farmers started spraying it, the population had reached a critical level at which the damage was already done. Whitefly is not a new insect in India. It is there, and you must have heard that every year it strikes some of the other crops.
Thank you. The next question is from the line of Shravan Vora, an individual investor. Please go ahead.
Hi. Thanks for the opportunity, sir. We've been invested in this company for the last 2 years. I am looking more from you on a longer term basis, how we should look at the business, because of the nature of the business being such that we are affected by some natural calamities and things like COVID. How should we look the business growth on a 2 to 3 years basis? Say if we are a 6,000 to 7,000 crore turnover company, so till where can we reach on a longer term basis, and what kind of margins we can achieve?
So, 2 things. One is that definitely we are looking at business by business. And I must tell you that COVID also gave us an opportunity to evaluate portfolio, number 1, and look at our cost structure, productivity, etc. I need to tell you in most of our fixed costs particularly, there have been either no growth or reduction in the last 1 year. And we believe that we have redefined our cost structure both in fixed and variable. The idea is to do everything possible through cost reductions, through research and development, and through portfolio changes to de-risk this business more and more. I do not wish to elaborate more on this call and waste everybody's time, but I would encourage you to take time with Mrs. Chavi Agarwal, our investor relation general manager, and we would on one-on-one basis we can definitely take you through what we are thinking and what we think, what realignments we have done in our cost structure as well as in the company.
Right. So just so that I can understand better, can for say the top 2 or 3 businesses that you have, can you give a little bit of longer term growth guidance or margin guidance? Because the nature of the business is such, like the margins tend to be, because right now the commodity prices are so depressed, they might not be so
in the coming years? So some longer term margin guidance and top line guidance if you can give.
So agrochemicals, we will be able to maintain the same profitability and much better growth than what we did last year. Last year, if you recall my earlier calls, almost a month production we lost in the month of May because of COVID infections in one of our factories. So animal feed margin expansion is very much on the cards. Some of the research and development initiatives will start proving. They should have proved themselves last year, but because of loss of volumes, etc., it could not happen. The last year was a very big disruption, I must say. So animal feed margin improvement will happen. Agri businesses, the same margin will be there. Oil palm plantation margin expansion will happen because of several other initiatives we have taken to improve oil extraction ratio. So I'm sure that in these businesses, all these businesses, we have some strategies lined up for even if the moderate top line growth will happen, but we want all these businesses to show expanded margins in future.
Right.
One of the metrics we follow, unfortunately it went for a toss, is fixed cost as a percentage of contribution. Contribution is margin after variables for us. And I think all the businesses have the target of improving that ratio, that is bringing down fixed cost as a percentage of contribution, so that this volatility does not hurt us the way it has hurt us last year.
Right. Thanks a lot, sir. Thanks a lot.
Thank you. The next question is from the line of Vidit Shah from IIFL. Please go ahead.
Hi. Thank you for taking my question. My first question was just on the finance costs, which have kind of halved from the 1Q levels and even from the third quarter of last year to around 6.5 crores. So just want to understand what has driven the reduction and what should we look at these costs to be going forward.
So in terms of the interest cost, basically the interest rate has definitely been coming down for us, and we have been borrowing at very, very competitive pricing. Though our average interest cost for last quarter was around 5%, the exit rate for us in January, as we borrow today, is around 3.5%. So I'm saying that we have been bringing down the interest cost through various avenues. Also, apart from that, the cash flows have been reasonably good. So all this has helped us in bringing down the overall finance cost.
So has there been any change in the debt levels versus, let's say, the 2Q reported debt, or has it been around the same level?
No, it's around the same level. In fact,
but we have brought down debt last year.
That is different. But in terms of debt, it would be at similar level. And in fact, it would have gone up a bit vis-a-vis Q2, because one of the things which we did was we used to have a lot of supplier financing, which was there, supplier credit which was there, and we realized that the difference between the cost of funding for suppliers versus our own cost, the gap was fairly large. So we said that let us cut down on supplier finance and move to our own borrowing, and that's what we have done. So the debt level, if at all, has only gone up in the current quarter because of this. Yeah.
Okay, understood. So secondly, just want to understand the capex budget for FY22 and the major projects that the company plans to be spending on.
So nothing very significant in FY22. Only two investments will be there, which are significant. One fish feed plant in Barabanki, near Lucknow. I must tell you that the current thrust of the government on aquaculture has opened a big market for inland fisheries. You'll be really surprised that the focus states for inland fisheries are UP, Uttarakhand, Bihar, parts of MP, Chhattisgarh. So we are coming up with a floating fish feed facility in Barabanki, UP, and we will continue to invest in more production facilities in Aztec.
Okay, so how much would the capex be on these two projects?
I think the UP plant is close to about $11 or $12 million, and Aztec will commission one herbicide plant in 2 weeks' time. That is the investment we had thought we will commission about 6 months ago, but got delayed because of COVID. And then we embark on one more facility, which will get commissioned in FY23. But the capex for next year will be close to about $10 million.
All right. This is the R&D.
Total, I think, about 150 to 170 crores.
All right. Got it. Thank you so much. Good luck.
Thank you.
Thank you.
Take the next question from the line of Pratik Rangnekar from Credit Suisse. Please go ahead.
Hi, sir. Good afternoon. My question is on the EBIT per ton that we see in the animal feed business. From the second quarter to third quarter, there is a drop in the EBIT per ton that we see. We've seen the similar drop last year as well. So is there something to call out there, or is there some kind of seasonality that we need to know here?
So, yeah, there is a seasonality factor which is there. In Q2 versus Q3, the salience of the aqua feed reduces, and that is what is sort of causing this kind of a change. So, but for that, otherwise, there are no major challenges there.
Other than that, whatever RM input cost increase has been there, that you've seen after the quarter, and most of that has been passed on. Is that understanding correct?
Yes.
Okay, so my next question is on the bird flu part. So could you just summarize for all of us what are the impacts that you're seeing on the different parts of the business from feed and the poultry business together, as in separately, if you could just kind of summarize it for us.
Impact of bird flu on feed as well as poultry.
So, impact of bird flu is going to be very severe on Godrej Tyson Foods Limited in case the prices don't recover and reach remunerative level in next 1 week. But the consumption is back to normal. The stocks are depleting at the farms, and South has started rallying. East was the first to rally. Cost of production of chicken in East is about 82 rupees, and the prices have crossed 100 rupees in last 1 week. But unfortunately, we are not present there, and I think similar thing is likely to happen in South. And if West follows, then we will be able to recover whatever we have lost in January in the quarter as total. I don't see much of impact on layer feed, because layer feed anyway, the egg consumption is short and there has been no disruption because of bird flu. But I definitely feel that broiler feed will have a small dip, particularly in the month of February, because it takes time for feed to dip. Initially, when the birds are not sold, they continue to eat. So broiler feed has a lag effect as far as impact of bird flu is concerned.
Fair enough. So,
but having said that, I think the full impact of drop in raw material prices in margin expansion in animal feeds you will see this quarter.
Thanks for that. So just a follow-up on that. We are seeing the consumption from the HoReCa segment pick up. So will that not be sufficient to tide over the impact of bird flu? You would say that despite...
No, HoReCa will take time. Actually, it is more talk and less on the ground, actually. I must tell you that what was the big consumer of animal protein, whether it is curd, ice cream, milk, chicken, the big consumption was in parties, banquets, marriages, etc. And that is the big problem right now, because most of the states have restrictions in number of people, and a lot of these things are not happening at the same level. So my sense is that HoReCa will take time. But if you really ask me why things will improve, because industry has already contracted.
Okay, so it's more a function of the base. On that base, we will be able to see a growth. Okay, thank you, sir. Thanks and all the best.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you. I hope we have been able to answer all your questions. If you have any further questions or would like to know more about the company, we would be happy to be of assistance. Stay safe and stay healthy. Thank you once again for taking the time to join us on this call.